Started here in just a couple of minutes and let all the participants come on in here. Stand by. Happy Tuesday. Howdy, howdy. It looks like everybody's starting to come in now, so let's give it another minute or two and then we'll get going. Hope everybody had a fruitful Tuesday. You can see me down here at the bottom of the screen, trying to use some webinar technology. Hopefully it goes well. Yeah, so just 1 minute, we'll get back on this thing and get started. Okay, we'll go ahead and get started. I'll be respectful of everybody's time, and this should take about 30 minutes, and then we'll leave some room for questions that you can put into the chat session, and we'll get those answered for you. And then we have some links and other things in there too that will pop in for you. But wanted to really use this as an informational session to introduce a couple of our projects. We'll focus on the main one this evening, which is the Oaks 121 unit multifamily Class B product in Northwest San Antonio, Texas, that we are under contract with right now and in the due diligence process. And the due diligence process goes pretty much from October right now, all the way through the end of October, and then we'll have 30 days post that for closing. So expected to close at the end of November, and then our due diligence period ends at the end of this month in October. So, but I think more importantly than anything, we'll get into the details on the deal, but I always say, you know, people invest in people more than they do the deal itself. The deal will speak for itself, but really people invest in people. And that's why it's important for you to understand who the sponsorship team, their backgrounds, you know, what we bring to the table, and how we're going to execute the business plan to ultimately get everybody the returns that we're projecting and have a successful investment. So most importantly here, and there's one person missing from it that is even more important, is Richard Simmons. Hope I pronounced the last name correctly. He's with Nextbase as well, and Rudy Medina. And I want to kind of focus on them for just a moment based on their backgrounds and what they bring to the table. So, you know, Rudy Medina has been in the business for, gosh, 20 plus years, over $500 million in acquisitions and development all throughout Southern California. They're into Las Vegas now, new construction, ground up, multifamily, repositioning a product. Very savvy in the capital markets, capital stacks, and financing, and his connections are unbelievable. And then you add to that Richard Simmons, his partner on that end, who a licensed general contractor, runs and operates logistics and operations from the construction standpoint of everything they do, and brings an enormous amount of expertise in that field as well. And then you combine that with our other team, which is myself, Justin. I'm a licensed general contractor, licensed broker. My background is really growing up in the development field, digging ditches on my dad's job sites, learning the multifamily business from both him and my grandmother, and then grew up, you know, really kind of learning that value of the dollar and the hard work, and got into the multifamily space, you know, well over 10, 12 years ago, and been doing it ever since, as well as a luxury broker in the Southern California market. And then Christopher Pulley, my business partner, who's in the tech industry, runs 2 tech companies, and kind of sits on the board of the Brennan Pulley Group, and brings strategic direction as well as access to capital, deals, opportunities that are there as well. And he is located both in San Diego as well as Austin, Texas. So we have a secondary headquarters in Austin currently. And then we got Jason Graves, strategic partner, and Kevin Bass on our analyst team looking at the deals for the underwriting. Let me jump back into deal aspects here for us, and we'll walk through it. Most of you, if you haven't had the chance yet to download this pitch deck, which goes through a lot of the details of the property itself and what we're looking to do with it. And I'll start kind of on the investment side, whether it's $50,000 minimum or $100,000 or even more than that. This obviously is similar across the board. And we're providing an 8% preferred return to all Class A members. On top of that, our projected cash-on-cash returns are going to average right around 12% throughout the life of the project. When you actually annualize everything out and you walk through this cash flow model for yourself specifically, you're looking at about an annualized return of about 21% or an IRR of 16 to 17%. An equity multiple, what that means is in this example, every $100,000 you put into the deal, you're getting $250,000 back based on this multiple. That number's a little typo there. But 2.5 back. So you're getting your 100 back plus another 150 on top of that. So 2.5 multiple on your money. As I said, minimum $50,000 investment. Here's some of the breakdown that you can kind of go through, and then I'm going to jump into the details of the property here, and you can kind of spend some time going through this, and I can answer any further questions that may be more specific to your situation, because the property is what's most important. Okay. So we are in escrow currently at $12.9 million. Capital improvements that we're projecting for the property is just under $2.2 million. Then we have title, closing costs, all of that. We're expected a bridge loan in the amount of at least $11.5 million, currently set with Berkadia debt at about 4.2%. It's a 3-year interest-only loan that we would then, once we're past the renovation stage in about 24 to 28 months, refinance the property and either decide to sell it if we have that opportunity in the marketplace to sell it and get out, that's an option, or hold for a period of up to another 4 years, so a total of 5 to 7. But during that refinance, if you look at the cash flow model, what that allows is hopefully a capital event coming out that kind of puts a lot of the initial investment, or at least a portion of it, back in your pocket, and then we're continuing to cash flow the property for the remainder of the years. Total equity requirement right now is about $4.5 million. That includes the 10% that we as the general partners are bringing into the deal. So we invest right alongside our investors, right in the deals. Our cash is in it. We're signing on the loans. We're taking the risk. We're getting married with all the investors along with it and putting our money right into the deals alongside you. Building, it's 1972 built. Average square footages, great floor plans. There's six or seven different floor plans, combination of townhome units. We were literally just there yesterday. We did a 24-hour jump into the property in San Antonio and walked the units all again with our material supplier, and got into the townhomes, the flats, everything there. So we got a really, third and fourth and fifth different looks at the property, and super excited about the floor plan mix and the setup there. Great opportunity. Let me showcase this aerial, and then we'll get into the other one too, because top 4 things we look at when we're looking at an opportunity is number 1, the location, right? Number 1, the location. The second to that is the people, right? And that includes leasing staff, property management, tenant demographic, right? And all of that combined, right? So who are the people involved in the deal? Third is the processes, so the property management companies, who's involved there, what processes are they using, how are they automating systems, ACH for rent collections, how are they dealing with work orders, all the details, logistics behind the scenes, or how are they operating the property, and is it mismanaged, right? Is it done by maybe a little bit more mom and pop operation, where we can come in and add some efficiencies to it and bring in our construction prowess and kind of upgrade and kind of push that value and add that value add and make it something special. So on this location, it backs up to the country club, the Oak Hills Country Club. You have 12 units here in front. These are all the townhomes, if you can see my cursor, that kind of come into this L shape around property. These are all townhomes ranging between about 1,300 square feet up to 1,680 square feet. It's a good size. 2-bedroom, 2.5 bath to 3-bedroom, 2.5 bath townhomes. and they all have backyards, and they all back up to the golf course. Pretty cool. And then all the interior units in here are all flats, stacked flats. This is going to give you a little bit bigger aerial on it and kind of its position into the medical center, which is really the key component of the location factor that we look for. So it sits right here. We have a Class B office, or I'm sorry, Class B multifamily right next to us, and then 2 doors down, a Class A, 2 doors down, right? And then you come in literally down the block, make a right-hand turn, and you have this huge medical center that's involved here. All these other multifamilies that are stacked in here, a couple of them against the golf course that are some good comps for us. And then you have a handful that are sitting in this area as well. So fantastic location in Northwest San Antonio, lots of jobs, lots of opportunity. You see it happening in the ability to come into a property that's really kind of a B- asset in terms of its condition, right? But the opportunity for the upside is magnificent. And we see that, and we can take it there with the CapEx that we have planned. Major employers in the area, just so you understand that, you have obviously the medical, you have the USAA, you got Hulu, you have the 4 major military bases in San Antonio. Most people don't realize this, but San Antonio is the 7th largest city in the United States. And they don't just have 1, 2, 3, but they have 4 major military bases within the region. And then on top of that, you have the National Security Agency, which is about 4 miles away. And that is the kind of Midwest headquarters for the NSA out of the East Coast, right? So they have the East Coast one, and you have the main one in San Antonio. The huge military and tech. And that is in conjunction with Austin, Texas, where you're seeing about an hour and 20 minutes away, all the tech and stuff, happening up there as well. Current interior photos. Condition interior-wise, you got LVP vinyl in most of them. You have ceiling fans, pretty clean units. They're just dated. So, we can come into these things and really renovate them with modern finishes, update a lot of the cabinetry, the flooring if needed. Update into a kind of a gray modern paint, adding in some backsplashes, solid surface countertops, washer dryers in the units, coming in here with a stainless steel package for all the appliances and a microwave, which don't currently have. So you can put all this in there, and then updating vanities and all those things as well. So you're kind of seeing the before, the currents, and then moving it into where we want to go, okay? Adding the washers and dryers and stackables and stuff in there as well. I'm trying to give you an exterior, before and afters as well. You can kind of see, the property is decent, but it's just, it's tired and it needs some love. So the, exterior when you walk it and stuff, very, bland palette. It's just brown, brick facade with some siding and stuff. We can really come in here and make it pop. I'm going to kind of show you from an exterior renovation standpoint of current, and then what we're thinking of for a concept. So you can take this facade out front, if you can see that, move it right over, and all you're doing is you're adding accent paints, you're adding some wood cedar into it, really making that thing pop from its current setup into this. And then into the common areas, you can add these little palapas, gazebos, little sitting areas, things like that. Kids play area very easily. There's already a dog park on site, but we can modernize it, upgrading the signage and all that stuff to make it really pop and make it exciting. Right? You see the comps and you drive the comps and you see what's going on. We can take it to that level, and if not meet them, we'll beat them. Here's your unit mix on the property, and I'll let you kind of go through these, but I think the important thing to know, and I'll get to the comps so we can kind of walk through where we're at right now for rents, where we're projected to go, and then comparing that to the comps in the area. So that way, we're confident. And it's funny because even talking to capital partners and bank partners and seeing where we're at, I've been told now they've already looked at my numbers and the numbers we've underwritten. They're saying, hey, you may be able to push those even a little bit further. We try and underwrite conservatively, but they're pretty optimistic on what we're planning to do and where we're planning to go, and they think we'll absolutely hit it, if not exceed it. So that's some good news to have that justified on the back end. But this is where we're at with unit mix. So you have a couple of 1-bedroom floor plans, handful of 2s in here, and then you get these nice townhomes down here, which are these guys that are 13 and 1,600 square foot townhomes. These are some nice flats in here as well. So good floor plans, good unit sizes, and they're set up quite nice. We push through this stuff because you've seen all this, and you can go through this on your own. So the market, and this is important to note, post-COVID, everybody's asked, how do the moratoriums work? How do evictions work? Where are delinquencies at? How are collections? All of that stuff, in the post-COVID world. And how do we make sure that, okay, if people aren't paying their rent, can we get them out? Where are the moratoriums at and all that stuff? And then how are collections and delinquencies and all of that? So it was part of the due diligence, which has happened over the last 7 days or so. We've walked every single unit. We use a software system called HappyCo. Interesting name, but a great software program that pretty much snapshots every single unit, its current condition, where it's at, and walking it. On top of that, we do full lease audits of every single lease. We know who's in the property, where they're at, where their application's at, delinquencies, what type of renter they are, all of that stuff in great detail through the lease audit system. And that's been going on for the last 10 days, and there's a lot more to do over the course of the next couple of weeks. But just so you understand the processes we're going through in great detail to really understand the property and where it's at. So unemployment rates have been dropping ever since. San Antonio is one of the best in the country. The total population in the MSA, so San Antonio is about 1.45 million people in the main corridor. And then when you kind of branch out from that, it goes up to about 2.8 million. Average occupancy for the San Antonio area is about 93%. Average effective rent's about $1,000. Median incomes, this is great. We like to see anything over 56,000 on median. This is around 64,000. Population increase, we want to see, over 1%. Right now, you're seeing it grow even higher than that, over 2%. And then we're looking at population, job growth, right, and some of the other factors involved there. But this is all good metrics that we're seeing. I'll let you kind of take a look at this stuff, but it goes through, some demographics of home prices, employment, population, all the stuff we just briefly talked about, percentages of rent to people's income levels and all of that. Major employers, like I mentioned, you have the 4 major military bases, USAA, you got Hulu and the tech, you have the huge medical system right around this property specifically, and there's a handful of others you can go through and see. The San Antonio airport, which is about 5 or 6 miles from this property, major employer, about 100,000 jobs, in the San Antonio International Airport. Medical. And that's why this was so enticing and why we're going to rebrand this thing, because if you actually walk around to the other comps and drive them, you'll see whether it's, branch at medical, residences at medical, vintage at medical. I mean, all these major complexes that we're competing with, they all bring in their main name, and then they tagline it underneath it with, at medical center. So we're going to be doing the same thing and making it the Oaks at medical center. This is where the NSA is. So just to give you a concept, the Oak Hills cursor moving. There we go. Right down the freeway on the 410, you get right off. It's 5 miles away, literally, and you drop right into the National Security Agency in San Antonio. So just I'll dive some detail in here, but then we're adding the washer dryers. Bedroom, same thing. Currently, we're going into these. We'll do black appliances with. They will not do maybe back. There we go. Let me know if you can hear me now. Okay. Thank you. Little technical difficulties there. My apologies. Gotta love technology. It blows up right when you need it most, right? Awesome. Thanks so much. See, on your 3 bedrooms, you can kind of see where we're at currently and where we're planning to go. And because there's not really that great of comps, for it, these are the other ones in the area that we can comp and then do better at. But you're not going to get the same price per foot, obviously, on the larger units as you're going to get on the smaller ones. So we have to keep that in mind as we push on those. But these may even be able to push a little bit further, just to keep that in mind. I'll let you guys go through the financials in detail there if you have any specific questions, so I don't bore you guys with that stuff. But this kind of shows you, to give you an idea of the plan. So let's presume close escrow at the end of November. The focus for the first 90 days is going to be on the external portion of the property. We'll start some internal renovations, but really the focus is to get the landscaping cleaned up. We're going to pull out about 16 trees, oak trees, lace them all back, redo the landscaping, get all the painting going, new signage, new brand, get all of that set so it's really looking sharp from the external portion, right, and curb appeal. And then coming into the spring, right after the holiday, we're going to be doing pavement, reslurring the property, all of that for the pavement areas, as well as getting the internal renovations going. So that way now you have a fully renovated exterior that looks really good from a curb appeal standpoint. So now when we start to turn the inside units and you're bringing in new tenants and they're looking at this thing, much more attractive, right? Because now you have a great external, then you're coming in and now you're seeing these new renovated units. All of a sudden it starts to make sense when they're comparing us, right, to the competition down the street. And then how to invest. If you haven't already registered in the portal, set this up here. There we go. That got into the chat session or popped up on your screens there, but pretty easy to access into the portal, and you could just set your reservation in there. And what that'll do is kind of give you priority over anybody else. We are filling up. We're about 35–40% full at the moment, which is great. Considering about 10 days into this. So looking forward to get that all wrapped up here in the next few weeks with the equity side. The debt side is underway, our guys with Bercadia, and so we should have some good term sheets and stuff ready to go here in the coming 10 to 14 days on that end. So but if you want to invest and you have any interest whatsoever, definitely log into the portal, or maybe you're still unsure, love to set a phone call with you, meet with you personally, whatever's going to be easiest for you. But at least get registered in the portal. So that way you're in there, we can update you with any information, you're in touch with everything, and we can get all the information, legal documents, everything out to you when it's ready to go. Accredited Investor. So this is a 506C offering, a Reg D filing. What that means is this is accredited investors only. So what is an accredited investor? This makes up what an accredited investor is. So you can read through these. They are on the pitch deck. You can go to our frequently asked questions. The key component one down here, and I always love this one because they have all these interesting ones up here. And then you're like, oh, do I match it? Do I meet it? I'm not sure, whatever. The one down here is interesting. It leaves it pretty wide open. If a person can demonstrate sufficient education or job experience showing their professional knowledge of unregistered securities like these, they too can qualify to be considered an accredited investor. So it kind of opens it up quite a bit. We do use Verivest, so we will be getting that out to you guys. It's a very simple process. You'll submit a couple documents or some information that'll maybe match into this, and they'll just accreditate you. So that way we have it for our system and any SEC filings that we need to put in. We already went over the team. TPAs, securities attorneys, business entity attorney, third-party bookkeeping. Norm Prett is our transactional attorney. He helped us negotiate the purchase and sale agreement. That's critically important. A lot of times money's going hard on these deals from day one, but you also want to make sure you're able to hold everybody accountable to get the due diligence done correctly and make sure everybody's working together and you're not stuck there with, big money pit. So involved in that when you're putting money hard. You want to make sure that that purchase and sale agreement is negotiated by an attorney, and Norm's fantastic. Local on-site construction crews. So all the bids are coming in now, just so you understand that, and we have all the construction crews in place locally, so that way we can execute the renovation plan, and as well as the property management locally on-site at the building with local maintenance in the building, as well as local leasing staff on-site every day. Disclosures, some CYA disclosures, and that's it. You will have an investor portal. As you know, if you've logged in already, it's there, and you'll have it 24/7. So any updates coming through the system, anything that we're doing, giving you tax documents, property updates, financials, videos, and more right in your portal 24/7. So definitely bookmark that. And then at that point, you can log in anytime you wish and get all the documents, and you'll be able to see it. And what's going to happen too is any updates that are coming out of the system will come right to your email. So that is the main part of the presentation. I kind of wanted to open it up to some questions now. You can kind of type them in the chat session, and we'll see if any ones are coming through. The frequently asked ones that we get a lot, I'll pull this up. Or you guys are writing a few of them down. Obviously, how do I invest? We went over that briefly. Accredited investors. Minimum investments, we don't went over that as a $50,000 minimum. Typical returns. Great question, Paul. Thanks for bringing that up. So the occupancy to the B to the right of us is actually north of 90%. I think they're at 92. The A1 is a nice property. They're even higher than that. And their rent levels are far above ours, because you got a B plus building next to us. The A class is substantially above that. And the best one, as I'd mentioned, was the San Antonio. There's several, but in my opinion, in driving them all, in terms of proximity, and I'll bring up the map for you real quick, because I want to show you what I mean by it and why. All right, right here. So we're here, if you can see my cursor there. You come right down the street, make a right-hand turn. Sitting right back in here is San Antonio Station, right? So that's this one. My apologies, you can go through there. But yeah, that's the San Antonio Station. So the reason why that's the best comp, because they're in the process of renovation. So they have some non-renovated, and then ones that are fully renovated. Their renovation levels are going to match similar to ours, where they got hard surface countertops, right? They're doing some backsplashes. They have washers and dryers in the units, right? Similar unit sizes and combinations, and similar location, similar setup back up to a golf course. Our unit mix is better, and our site is actually better, but in looking in the interior unit comps, very, very similar. So and their rents that they're getting right now today are exactly where we want to be. So you can match that up in the comp section for you. Greg, thanks. Great question there. What is the marketing plan promotions that are planned for improving the tenant profile? Awesome question. So CalCap is our property management company. To give you a quick little background on them and why we chose them, because I interviewed 3. CalCap owns about 4,000 units. They have multiple divisions in their company nationwide, but they currently run in their division about 4,000 units. They also have a construction division, they have a capital division, and they have a property management division. They're very good at understanding this value add process, and they do it themselves. Their whole company does it. So all their staff is pre-set up, knowing, okay, you have a property that may have some Section 8 in it, profile, you want to take it from where it's at and turn that profile over. So the marketing plan in general, through the rebranding that we're going to do, right? Exterior renovations, making the thing pop, getting it out to the medical center community, really making that thing showcase itself. And then online through apartments.com and all the major websites. The property right now, the current website is horrible. It'll have a brand new website, portal, tenant login, everything real sexy on that end. So you're going to have videos and everything on site, 3D Matterport tours, all that stuff on the marketing edge for the properties and the units themselves. And then through apartments.com, Apartment List, all the major syndication websites for marketing apartments and rentals. Right now, if you go on there, their marketing is not like, it's not showcased, it's not featured. So we'll be featuring that. And CalCap is beautiful through their marketing and changing all the branding, the brochures, all of that stuff, as well as the entrance to the property and the curb appeal. That's where that marketing, right, and the plan and the promotions is going to make a big difference. Great question. Another question came in, can I pull my money out at any time? The unfortunate answer is no. However, you do have a right to sell those shares, but it has to be done internally within the other members of the partnership. So you could say, hey, I have a family emergency, something came up, we're 2 years in, real dire situation. Well, that's fine. We just need to know about it in advance. And then you'll see in the operating documents and legal documents, we'll then at that point put it out to the other members to essentially buy you out and buy your shares at that point in time based on an appraised value. So 2 appraisals will get done based on those appraisals, your shares and your values there, and then that can be bought out by the other members. Can I see my investment 24/7 online? Absolutely. That's why we set up the portal for investor relations. That's why that's there. It's a great feature that people enjoy. Do I get actual ownership of the investment? Yes. So whether it's 50,000, 100,000, 500,000, that is a pro rata share investment. So the shares you're buying is an actual equity ownership. So with that, you get the 8% preferred return. You get a 70% of the deal based on your pro rata split. You also are going to get tax advantages. So we are doing what's called cost segregation analysis. That'll be done the minute we close escrow. That'll be done. Let me make sure we got my microphones on there. Cool. And that pass through, so we're going to be able to accelerate the depreciation on the building within those first 1 to 2 years and pass that through to you as an investor. So that way you can, whether it's capital gains, right, passive income, or active income if you're a real estate professional, you can now write off when that passes through to your personal income taxes. You know, on paper, you're going to show a loss, even though there's not a loss, but on paper, you're going to show it. So that way you can offset your personal and/or cap gains, but definitely talk to your tax advisor. CYA. And another question here. Yeah, the one on the tax benefits. We got that. See here. Cool. Looks like that's all the questions we're showing at the moment. I want to make sure. Then let's put in, and this is why we have it on while we're talking about it. I'll, in addition to the Oaks, we have another set of properties, 110 units. That's the Chantel Cove deal that we'll be doing another webinar on, literally 2 to 4 miles away from this property. Those are Class C buildings, a bigger push on the heavy lift. We'll have a whole different webinar on that one. If you haven't seen that one already, I think that's a fantastic one. We were driving it yesterday on all the different properties. So, and then more importantly, there's a real chance for more deals, especially in 2022 coming, that, you know, we can't talk about yet, but, you know, we're looking at and in the process of. So we're definitely looking for some more opportunities in that area specifically. All right. Thank you so much, guys. A lot of great questions. I hope I got most of your questions answered and gave you the information. If you do have further stuff, oh, we got one more here. Hold on before we finish up. Can you explain in more detail how the investor's interests are recorded legally? Yes. We use a PPM, which is a private placement memorandum. Those documents will be ready. Actually, I was told by our securities attorney tomorrow or on Thursday. And then we'll get that into the portal. So it's a private placement memorandum. We have an operating agreement within that. You have a subscription agreement. Then you have the offering itself that'll explain the offering and how everything breaks down. You'll get to see it. But it'll be a pro rata equity ownership based on the shares that you buy. So if it's $100,000 investment, that gets you 2 shares, which is X% equity ownership in the actual property and partnership itself. Rudy Medina, great question. I should bring you in, Rudy, and have you moderate with me. Have you gone through the accelerated depreciation? Yes, we have. We touched on that. I don't have the physical numbers on what that's going to look like yet, but yes, we will do a cost segregation study. We have bids on that now, and that'll get done immediately following closing of escrow, so that way it can be captured here in 2021. So when you're doing your taxes next year, you'll have that offset to accelerate that depreciation, both from capital gains as well as possibly active income. If you're a real estate professional, you can do both passive and active income if you're a real estate professional. Otherwise, if you're, say, a doctor and attorney and you can't classify as a real estate professional, then you would just get your capital gains when it passes through on a K-1 statement. Your tax advisor will give you all this information. I don't want to get too much into the detail, but they'll walk through that with you. Great question, Greg. 86% occupancy at the moment, but it's going up as we speak. They had 28 units. Let me touch on that, because I had that in the summary video. I think that's a really important factor. I'm going the wrong way here. Yeah. I want to explain the story behind this property. Component. Okay. So if you can look at my cursor here, these 12 units in the front burnt down in early 2020. When that happened, obviously they were vacant. And then on top of that, through either poor management or improper management or inability to market because the eyesore that was going along here, Babcock Road, a lot of traffic along here. They had an inability, and they got up to about 28 vacancies in the complex. That has now been leased up, because these are now done. They're getting leased up as we speak. Everything's completed, and we should probably be close to about 88 to 90% occupancy upon closing. And the reason why that's important, we actually want to have a handful there vacant, ready to go, that we can go in and turn quickly on top of the exterior renovations that are going to take place almost immediately. And how many leases approximately are coming up for renewal in Q4? As I mentioned, right now they have we're at about 86% occupancy, 14% on the vacancy factor, and that's being leased up, because there's going to a handful more that are going to be moving in here pretty quickly here in the next probably 30 to 60 days. So I would expect us to be close to 90% by close of escrow, which should be pretty good, because that's going to give us a handful there to be able to turn quickly. Are the interior finishes of the remodel units up to par with the rest of the plans for the property? Yes. So right now, the current finishes, let me show you if you saw that real quick. Here's the current interiors. So LVP vinyl, they got this kind of sandy, paint. Pretty clean units, but the cabinets are kind of the older style cabinets they got Formica countertops in here. They do have black appliances, which are decent, and when you look at the comps that you drive around the area, a lot of them have black appliances too. So when we go in there, obviously we're looking to bring in maybe a stainless steel package, but the black is just fine. It's not going to get you much more of a bump in rent to have black versus stainless steel. So it's just whether or not it's something we want to do. But adding in newer cabinets, solid surface countertops, the washer dryers are a huge kicker. You can get 60, 70, 80 bucks a bump on those things with the washer dryers in unit, which is really, really important. That's the main kicker on there, but these are the current interiors. So you got carpet in the bedrooms, LVP vinyl throughout, carpet on the stairs on the townhomes. Oh. Great question, Gray. Yeah, so on the new units, the 12 that burnt down, are those interiors? Yes. So those are fully upgraded with the exception of the countertops are Formica. And let's see, the paint is still this kind of tan paint. So in those units, we're going to go in and add solid surface, either quartz or granite. And then the washer dryer connections are already in those units. We would just put the units in. and then we would repaint to a modern gray. But yeah, all LVP vinyl. Then you got carpet in the bedrooms, but LVP vinyl throughout. The bathrooms are upgraded, but it's really just countertops. We may cabinets are actually pretty good in those. They have thermofoil cabinets, not bad. I don't know that it would make sense to upgrade those too much, but really the washer dryers and then the solid surface countertops and those ones, and then paint. Yeah, so really it's 109 out of the 121, Greg, that really need renovation. But even those 109 are partially renovated now, so we may not even need to renovate all the flooring because they already have nice LVP vinyl in there. It'd just be a matter of, do we lighten up the flooring? But you're going to do new paint, new countertops, washer dryers, ceiling fans, and mostly have ceiling fans already. We may upgrade those and just really brighten up the units and modernize them. Maybe add some backsplash behind the kitchens and then the bathrooms. Awesome questions. I appreciate it. I'm not seeing any other ones come through at the moment. Hope that answers most of them. And then, yeah, feel free to, shoot me. I'll put email there in the system. But, yeah, feel free to email me specifically. I can set up a phone call with you. I'll even give you this link real quick here, and we'll finish up. Here's a link if you want to set up a little calendar invite. We'll do a phone call personally and set that up so we can go over details and any specific questions as they pertain to you and whether you're looking to invest or not. So looks like that's it on our end. No further questions at the moment, but I really appreciate everybody's time and taking this. It's been about 40, coming up on 45 minutes now, and we'll end it here. But looking forward to it, guys. We're really excited. So, whether it's the Oaks here, this one, which is 121 units, or the Chantel Cove deal, which is 110, we'll have another webinar on. Both great opportunities. And then on top of that, more coming in 2022. So we look forward to getting you guys involved. And